Hello traders, I'm back with one more video. Today we will be discussing about what is the difference between debit spread and ratio spread. Alright, so though this is a very simple video, but you guys have to know from some important parameters. Alright, so unless and until you know what is the difference between ratio and the debit spread in terms of some important parameters, alright, so adjusting, maintaining, holding might become very difficult. Alright, so let me take you to sensible. So what I'll try to do is, like, I'll just try to deploy a debit spread. So market stands at 43,700. I'll take the round figures, I'll buy this, and then round figure I'll sell. Okay, this is my debit spread, guys. Okay, 1 second. 40, sorry, my bad. I'll go for 43,500, my bad, and then what is this? 43,000. Okay, let me remove this. Okay, so this is your typical debit spread. In the second window, what I'll do, I'll just try to deploy the ratio spread. What did we do? We took 43,500, same time. What is ratio spread? And then sell, and this is your typical debit spread, and then on top of this we will sell one more put. That's it. So this will be your ratio spread. Simple, right? See, if at all you want to know the difference, basic difference, you can watch other videos, but today we will just discuss from some important parameters like your margin needed, what is your break even, POP, and everything. Okay, now if at all you look at the margin in the debit spread, it requires only 25,000, whereas this requires almost like 1,27,000, 3 times more than your debit spread. Okay, looking at the absolute profit in the debit spread, this has almost like 9,800, and your maximum loss is 2,685. Keep a check on this thing. In the ratio spread, you have 10,000 but on a capital of 1,27,000, but debit spread you have almost like 10,000, which is like 38% just on the capital of 24,000. all right, loss is similar, right? Loss on the call side is like 2,200, but it shows unlimited. You have to know this because ratio spread is a combination of 1 buy and 2 sold. So you have one naked put position. That's the reason this will show you unlimited loss. But technically your unlimited loss will start only when the bank nifty, when the instrument goes like 3.5%. check this, right? 3.5% is your downside safety, and this one 0.5 is your break even, meaning you are bearish. This is put debit spread, so your profit will start only when the market expires, right, below your break even, meaning, right, this is your break even 0.5%. so your profit will start from here till here. All right, from 0.5% till 3.5%. but whereas in the debit spread your break even is 0.5%, and from this position, from your break even till this position, that is your sold position, right? 43,000 is your sold position. Check 43,000. so from the break even till your sold position, this is your minimum profit, and from here it's maximum profit. That's it. Maximum profit is static. Even though the market expires at 43,000 or 42,700 or 42,300, your maximum profit will remain same. Okay, now the actual difference is like when exactly we have to deploy the debit spread and when we have to go for ratio spread is the biggest question, right? We have seen in terms of capital, we have seen in terms of absolute profit, we have seen in terms of maximum profit, maximum loss, probability of profit, it shows 29%, but here it shows 30%, not a big deal, projected return and everything. Now the important factor would be that when exactly you have to deploy the debit spread. Simple, guys, I'll tell you one thing. So let's take an example of market stands something, your bank nifty, let's say as this pattern. So let's say this is having this pattern, guys. All right, so now let's say the bank nifty stands here and you see a sort of reversal candle getting formed, or maybe based on the open interest and everything, you see there are like more number of calls sold, or maybe too much of shortings are happening. See, all depends on the data. If you see there is a candle, a reversal candle, so then going for, see, I would say then going for ratio spread makes sense, because when market stands here, you might expect that market can slowly come down, because you know there is a strong support here. So market can slowly come, slowly, right? It can slowly come. It can take the bounce back from here also. See, that's what happened, right? Support 1, support 2, support 3, support 4. Same thing, right? Resistance 1, resistance 2, 3. When the bank nifty stands here, you know market can slowly come down and it might take a bounce back. So then it makes sense to deploy the ratio spread. Point number 1. When exactly you can go for debit spread is the question, right? Now let's imagine, guys, uh, okay, market came down, it has breached your support. This is your support, right? Finally, one second, guys, one second, where am I? Okay, this is your support, resistance. Market came down, this has breached your support, and then you see a sort of shorting happening here, right? Data, based on the data, or let's say there are like huge calls are getting sold, which shows the bearish sign. Any bearish sign, if the market comes down, so guys, don't go for ratio spread. You have to go for typical debit spread, for the simple reason being, when the market breaches the support, right, it can fall with very quick momentum. So your debit spread is the ideal candidate for this kind of market situation, because even if it falls like with quick momentum, you do not have the unlimited loss here, the way you have unlimited loss for your ratio spread. Take an example. Let's say you might have deployed the ratio spread here, right? All of a sudden, though your break even, though the loss will start only from 3%, but let's say the market quickly falls like 4%, 3%, 4%, then you will get into this unlimited loss. So there are only two things, guys. Whenever there is a breakdown, don't go for ratio spread, rather go for debit spread. Simple. Whenever there is a resistance, so here you can just go for ratio spread. Here you can go for ratio spread, because the market fall, majority of the time the market fall will be slow. Okay, so this would digest the maximum loss. But whenever it has already given a breakdown, if you have some bad news, if you are bearish about the bank nifty, so then don't go for ratio spread. Right? So even this we have discussed, and let's discuss about few more factors which are very important, guys. Okay, what I'll do, and now let's say the market falls by 1%. Simple. I'll take the 1.5%. Let's say the market falls by 1.5%. So your debit spread will give you a profit of almost 4,811 projected profit, guys. Check the black box, right? T plus 0. I'm not talking about expiry. Okay, even if you talk about the expiry, that's a different case. On T plus 0, you will get 4,800 with 1.5. What does your ratio spread does? Same, right? 1.5%. Let me show you, right? 1.5%, you will be getting only 2,582 profit. So the absolute profit is more in debit spread, but the profit is less in ratio spread. And let's take an example, right? Tomorrow market gaps down by, let's say, 3%. Let's say market gaps down by 3%, you will get almost like 8,500 profit in debit spread. But what happens in this trade? 3% gap down, right? 3% gap down, guys, you are technically in loss. Try to understand the blue line, guys. In your ratio spread, if the market gives you 3% gap down, you will be in loss. But your debit spread at 3%, you will be at huge profit. So the difference is all about, this is a Vega positive trade. If you look at the Greeks, this is a Vega positive trade and this is a Vega negative trade. So for you, for this trade, for ratio spread, you want the VIX to fall. But here you want the VIX to go up, because rising VIX will increase the premium of your buy position. But what happens in this, the rising VIX, though it will increase the premium of your buy position, but technically it will increase the premiums of your sold position also. So only up to some certain limit you will get the benefit, you will not get into maximum loss. But if there is a quick momentum, then this will start giving you the loss. So now you have to check basically. So I've told you that based on the market view, you have to enter either into ratio spread or into debit spread. If you think that market is super bullish, go for debit spread. If you think that market is like sideways to mild bullish, mild bearish, this would act. And the other thing is like always you can convert your debit spread to ratio spread. Simple guys. See, if at all I want to convert this debit, let's say the market stands here, you are at a good profit, and then if at all you want to convert it to, let's say, ratio spread, or else let's say the market is going up, you will unnecessarily get into this loss. So then what you have to do is like, see, the moment I convert this to ratio spread, let me sell this thing. Okay, that's it. Now initially your loss was, if I did not add this thing, your loss was 2685, but now the moment the market is going upside, then you can just sell one more, you can convert your debit spread to ratio spread, your loss has reduced. If at all you are like not concerned, if at all your view has changed saying that market will go up, if you sell this to, your loss will further reduce. Your loss has come from 2000, what is that, 2685 to almost like 1785. It all depends on your view. And the other good thing is like, it's all about blue line. So let's say I'll increase the quantity to 2. Okay, and then if at all I want to make this blue line more steep upside, right, see, this is quantity 2, quantity 2, quantity 2, right? If I want to make the blue line, see, my loss will start only when the market makes a gap down of 3%. Right? Don't ignore this blue line. Whenever the blue line breaches this zero line, that's where your loss will start. So if at all I want to make this blue line more steep, something like this, so what I have to do is like, just change the quantity of your second sold position to 1. That's it. Now check, your blue line is giving you a safety of almost 4.5%. Your blue line was safe till this point, but now I cannot drag this. Your blue line is giving safety. So you have to play with the quantity. Check the blue line, but your loss will increase here, right? Your loss will increase. So that's the reason, right? Don't be rigid. Don't make all the strategies static. It all depends on the view of the market. If I make it to 2, see, my blue line safety is here. My loss will start here. If I make it to 1, got it? If I make it to 1, my loss will start only after like 4.5%. It all depends on the view of the market. Okay, let me make it to 1. All the trades. See guys, we have discussed so many factors, so you have to consider all these factors. Don't be rigid. So what all things we have seen, view is important, the adjustment skills, and one more thing is that, let's say the market stands here, ratio spread, and you're worried about the extreme loss, this unlimited loss on the put side. So what you can do is like, you can convert. See, what you have to do is like, let me show you, just go and buy one for, see, we are maintaining 500 points, right? 43,500, and then we sold 43,500 spread, and then we sold one more 500 spread, and now what you have to do is like, just go and buy this. That's it. So now this has become your limited loss. I don't know whether this is like iron code. I don't give much preference on the naming convention. For me, the psychology matters. Let's say the market stands here, and then if you're worried about, if you do not have this thing, you are worried about extreme unlimited loss, and the moment you buy this, you have converted your trade to what? You have converted your trade to risk defined. And check the capital. The moment you bought this buy, your margin has reduced. Check this, your margin was 1,27,000. The moment you bought this, automatically your margin has reduced, automatically your unlimited loss has become limited, right? I mean, there are like n number of things what you can do, guys. I mean, and if you pull the, I'll show you one thing. If I go like 100 points here, 100 points here, see, slowly your loss will increase, your profit will also increase. I mean, just in case, if you, let me show you, if I get it like 100 points down, okay, see, if I get it like 100 points down, so now what happens is like, your loss has reduced from 2,600, loss has become this thing. So always check the what do we say, the basically what we say, the liquidity. But let me go by 100 more points, and let me go down by 100 more points. So now your loss has further reduced. Let me go by 100 points, and let me go by 100 points. Your loss is furthermore reduced. It has come to 584. Originally your loss was like 2084. Like, so these are the few of the things what you need to consider, guys. And you know, right, the capital, the margin and everything, but view of the market is important. The same thing you can just do with the call debit spreads also. I've just shown you. Okay, let me take you to call spread. Same thing, right? Your call spread. And this is what happens, guys. You should not be, I mean, this sensible. I mean, I do not believe. I'm not. I mean, this will show like huge. This is so. What you can do is like simple, guys. Let me show you the call. Also, market stands at where is the market standing? 47,300. Let me take the round figures only. Okay, I'll buy this 500 points. I'll sell this. So this is your typical call debit spread. Loss is 1900, profit is 10,000. If at all you want to convert it to ratio spread, that's it. You have to sell one more. That's it. Round figure. So this has become your ratio spread. Same thing, right? Minimal loss. This is unlimited loss, but you have the support of your maximum loss. Your loss will start in case if the market makes a gap up by 3.52%. All right. Even let me show you. Even you can go for like two quantity to make the blue line more steep upside. Let me go to two quantity, and then the sole position will just go for one. That's it. Your blue line is giving you huge safety. See now, your loss will start. I don't know where. Almost like 5%, guys. Your loss will start. See this one. When the market makes the 5.1% gap up. Alright, so guys, just in case if you like the video, please give it a like. If you feel that I need to cover few more things, comment in the video saying that you need, because even this video, one of the subscriber has asked me, right, what is the difference between debit spread and ratio spread. Okay, so these are the few of these. See, we can discuss for 1 hour, 2 hours, 3 hours also, but let me know in case if I want to cover other perspective. Alright, so thank you guys.